So blockchain technology, I will go out on a limb and say is one of the most foundational innovations of this century. I think it will create more wealth than the previous two tech booms combined. What blockchains do is they give us an ability to strip out, to liberate this $7 trillion in the trust industry, which is why the banks hate it so much, and use it for better purposes.
Renowned hedge fund manager and crypto enthusiast Mark Yusko predicts that blockchain technology, the underlying technology of the cryptocurrency industry, will cause a massive explosion of wealth creation that will overshadow the previous two tech booms combined. According to Yusko, Web 1 and 2 created about $7 trillion of new wealth. The Morgan Creek Capital founder is certain that Web 3 is going to create tens of trillions in new wealth over the coming years. The large percentage of this new wealth will go into top cryptocurrencies like Bitcoin and Ether, as well as into other digital assets built on the blockchain. However, that might not even be the industry's greatest achievement, according to Yusko's predictions. The renowned hedge fund manager also envisions the complete destruction of what he describes as the trust system. The trust industry is the traditional finance industry, which has for hundreds of years exploited the many to fulfill the greed of the few. It's a system which basically takes your money and commands you to trust that you will get it back. Someday, when it decides you don't get your money back, then you don't. Yusko estimates that the custodians of the trust system, banks, brokerages, auditors, insurance companies, etc., manage to siphon $7 trillion for their services annually. When the trust system of the blockchain finally destroys that corrupt system, those trillions will be poured into the truth system, which rather than support greedy billionaires, rewards everyone based on their input. We will now bring you clips from Yusko's recent interview with Money Tree Investing. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications so you never miss any of our subsequent uploads. Thanks and enjoy the video.
So blockchain technology, I will go out on a limb and say is one of the most foundational innovations of this century. I think it will create more wealth than the previous two tech booms combined. And what do I mean by that? So Web 1, which was pretty amazing. So from the early 90s to the middle to 2010s, we had this thing called Web 1, the internet. And the internet created about $2 trillion of wealth. Companies like Cisco and early days of Microsoft and Intel, really big business. But $2 trillion, and that was a lot of money. And that was all about read, meaning I could now get access to information ubiquitously, instantaneously. In the old days when I was growing up, you're a little bit younger than me, but you had this thing called the encyclopedia, like literally a bunch of books that you went and that's where you got your information. It was out of date. It was biased. I mean, it was crazy, but that was all we had. We couldn't type on a computer, and go to Wikipedia. So, and I'm not saying that's perfect, but all information in the world is at our fingertips every single day. That's better. So the web was good and it created a lot of wealth. Well, then Web 2 came along. Well, now it was about read and write. Now get things like social media and e-commerce and things like Amazon. Remember, Amazon's only existed for 27 years. In the first 10 years, it wasn't really much of a success. So in the last 15 years, it's created trillions and trillions of dollars of value. And Web 2 created about $5 trillion of incremental wealth. It's pretty cool. But that's read, write. Well, now we're going to have read, write, own. Well, what does that mean? Well, if you think about what the internet did, it made information available. Web 2 made information two-directional for the first time and exchangeable. Well, now value can be accounted for and exchanged, and you can own your identity, your data. Again, in the old days, you post content on Facebook and they monetize your content, or you send your DNA to 23andMe and you get your heritage and they sell your DNA to a drug company for $1,000. Why didn't you sell your DNA to a drug company for $1,000? They didn't know how. Well, in Web 3, all of these things will be ours, right? Our data, our health data, our intellectual capacity, everything will be owned by us using blockchains. Well, I'll give you a simple example. Money. In the old days, I lent you money and Okay. I wrote down in my ledger, papyrus or clay tablet or whatever it was, thousands of years. And you came back a year later to pay me the $110. And I'm an unscrupulous guy. I'm not trustworthy. You had to trust me, but I'm untrustworthy. So I wrote down 200. I changed the ledger. And you come back to pay me, and the ledger says 200. And you're like, well, but I only borrowed 100. It's your word against mine. And I got the book. You were out of luck. With blockchain, it can all be based on truth. I don't have to trust anybody. I know on the Bitcoin blockchain, if I have a Bitcoin, I have a Bitcoin. If you have Bitcoin, you have Bitcoin. If I transfer one to you, it's a permanent, immutable ledger. And that is an amazing innovation. So what blockchains do is they give us an ability to strip out, to liberate this $7 trillion in the trust industry, which is why the banks hate it so much, and use it for better purposes. And here's the cool thing. If you liberate $7 trillion a year, which is 68% of global GDP, and you put it back in the hands of the people, it turns out human creativity is the most powerful force in the universe. And with some additional capital, they'll create some amazing things.
During the interview, Yusko also addressed an important fear many people have about artificial intelligence. Over the past year, especially with the crazy chat GPT mania in December, lots of people put out think pieces about how artificial intelligence will destroy the jobs and livelihoods of billions of people around the world. Yusko acknowledges the risk but describes it as a necessary evil for the next bout of innovations that will be unleashed on the world. According to the renowned hedge fund manager, billions of jobs might be destroyed, but tens of billions more will be created as a replacement. Yusko gives the example of many industries that have been wiped out in the past with lots of jobs destroyed. Yet we currently have more number of jobs in the world than at any other point in history. Let's get back to the interview as Yusko speaks further about Bitcoin and the overall cryptocurrency industry.
Blockchain does is by getting away from trust and moving to truth, we liberate this capital and allow us to build a better future. And so when I think about digital assets, I absolutely want to own Bitcoin. Bitcoin is the first use case of a blockchain, and it is digital gold. Well, what is gold? I said gold is money. It's the only money that's ever existed. A single ounce of gold for 5,000 years bought a fine person's suit. From Cleopatra's time to a suit of armor, to a zoot suit, to Savile Row today. Single ounce gets you a fine person suit. Okay, perfect store of value. But here's the thing. If I had a bar gold right now, and I wanted to break it in half and send you half, two problems. One, I'm not strong enough to break it in half. Okay, even if I could break it in half, I can't stuff it in my computer and send it to you. So it's not very portable and it's not very divisible. But if I want to send you Bitcoin, I can tap a couple buttons and bing, I can send you value. So Bitcoin is equally scarce. It's permanent, immutable truth, and it's portable and divisible. It's just better gold. Gold is the base layer of money in the world. All currency is built on top of it. Central banks own gold. They create currency using debt on top of it, dollars, yen, euros, bolivars, whatever. Same thing will happen here. Bitcoin will be digital gold, and then the digital age will be built on top of it, and every country will have their own digital currency. Now, some of that's a little dystopian. I don't want the government to be able to tell me how and when and if I can spend my money. Imagine this: central bank digital currency in the future. You get paid on Friday, go have a few cocktails, drunk text about the president, and you wake up next day, your money's only worth 70 cents. Mark, that could never happen. Yeah, it could. Or worse, they say, you know what, if you don't spend this money by Friday, it disappears to encourage consumption. Or worse, Walmart pays a little something to the government. Your money doesn't work at Target anymore. That could never happen. Yeah, it could. It could. So CBDCs, lots of problems and challenges. Governments are going to have them. They'll be digital fiat. China already has one. Ultimately, fiat currency is bad, evil, horrible, fine. Bitcoin's better. It's a store of value. Think about being in Venezuela. If you stayed in bolivars, all your wealth is gone. All your family's wealth is gone. All of it, gone, zero. Had you converted those bolivars to Bitcoin, you still have your Bitcoin, and it's worth a lot more. So same thing in Turkey, same thing in Argentina, same thing in the United States. 3 years ago, if you bought Bitcoin at $10,000, right? The money that you have is now worth half as much because they printed $10 trillion, right? The price of everything is up. So your value, your currency is down, but your Bitcoin is now worth 26,000. That's better. But the Bitcoin didn't change. One Bitcoin, still one Bitcoin. What happened is the money got worse because we price Bitcoin not in Bitcoin. We price it in dollars or yen or bolivars or Argentinian pesos. So it's that relative value that matters.
In other news, billionaire investor Stanley Druckenmiller believes it is important to own Bitcoin. He recently discussed with Paul Tudor Jones, another iconic hedge fund manager at the J.P. Morgan Robin Hood Investors Conference in New York City on October 24. When asked about gold and Bitcoin, the billionaire investor said, "I'm 70 years old, I own gold. I don't own any Bitcoin, to be frank, but I should." Going further about how Bitcoin appeals to the younger generation, he added, "I was surprised that Bitcoin got going, but it's clear that the young people look at it as a store of value because it's a lot easier to do stuff with. 17 years to me, it's a brand. I like gold because it's a 5,000-year-old brand. But the young people have all money, certainly the ones on the West Coast." Druckenmiller used to be a Bitcoin investor but got out last year when the U.S. Federal Reserve started quantitative tightening. But even then, the billionaire investor noted that he could see the cryptocurrency industry having a big role in the renaissance because people just aren't going to trust the central banks. What are your thoughts on Yusko's interview and Druckenmiller's comments on Bitcoin and cryptocurrencies? Please drop your comments and observations in the comments section below. Also, make sure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.